Hey everyone, welcome to The Explainer. Look, today we're completely dismantling that outdated advice you've probably been fed for years about earning a living. If you're tired of trading your hours for a paycheck that barely stretches to the end of the month, well, you're in the exact right room. We're going to break down the raw mechanics of wealth creation, entrepreneurship, and scaling a business. So step into my office, grab a notepad, and let's figure out how to stop exhausting ourselves chasing cash and start cultivating your own money garden.
So why do the rich just keep getting richer while the poor get poorer? It's the elephant in the room, right? It's a question that frustrates millions of hardworking people every single day. The gap between these two groups isn't shrinking at all. It's expanding rapidly. And while diving into the core source material for today's explainer, I uncovered a pretty harsh truth. The conventional, traditional approach to making money is entirely broken for the vast majority of us. Becoming wealthy actually isn't about working yourself to the bone. It comes down to two very deliberate steps. First, you earn money. Second, and this is absolutely crucial, you use that money to build assets. Because, fruit never grows without a root, and real financial change never comes with strategic action.
Let's talk numbers, because the mathematical reality here is honestly staggering. Literally 1% of people own 99% of the wealth. Meanwhile, the rest of the world is basically fighting over crumbs. 99% of the global population is scrapping for that tiny remaining 1% slice of the pie. Just think about that for a second. The vast majority of people are playing a game where the odds are mathematically stacked against them from the jump. If you want to move from that 99% group into the 1%, you can't just work harder at the exact same flawed strategy. You have to completely change the game you're playing. To really understand how the top 1% view wealth, check out this quote from entrepreneur and investor Naval Ravikant. He says, "If you take all my money and assets and drop me on a random street in an English-speaking country, I would get back to my current position in 5 to 10 years." Wow. Why can he say that with such absolute confidence? It's because earning money isn't just a stroke of luck. It's a system. It's a highly learnable skill. Once you master the mechanics of building wealth and scaling businesses, even if you lose the whole shebang, you can start from absolute zero and build it right back up. Okay, so let's dive into the foundational metaphor here, because this is the mindset shift that literally changes everything. First, think about the 99% mindset. It's like chasing butterflies. The butterflies represent money. When you chase them, they just fly away, right? You exhaust yourself, constantly running after them. Now, flip that to the visionary 1% mindset, building a garden. The garden represents assets. When you build a beautiful, sustainable garden, you don't have to chase the butterflies anymore. Thousands of them will naturally just come to you. So the real question is, how do you stop exhausting yourself and start building that garden? How do you earn that initial capital when you're starting with nothing? Well, we're going to look at 3 actionable pillars to do exactly that.
Let's jump into Pillar 1, sweat equity in real estate.
Real estate is widely considered the ultimate wealth game. Most of the world's wealthiest people built, or at least multiplied, their fortunes through property. But here is the roadblock almost all of us face. Real estate usually requires capital. So how do you break in from zero? The answer is your starting salary. You should be willing to accept exactly zero. Because you lack the capital to invest directly, your very first critical step is just to get inside the room where the deals are happening. You need to learn the business strategies, the market dynamics, the art of the deal. The absolute easiest way to gain that high-level knowledge is through practical, hands-on coaching. Even if the salary they offer you is $50,000, $10,000, or literally zero, you take it. Why? Because you're getting paid in elite education. The experience you gain by just being inside that room is an invaluable asset. So here is your ground-level execution playbook. Step 1. Be incredibly proactive. Approach local brokers directly and offer to hustle for free. You tell them you want to learn, and you put your sweat equity on the line. Step 2. Target high-volume real estate firms and builders in your area. You want to insert yourself into a massive deal flow environment. By immersing yourself in that kind of fast-paced setting, your learning curve is going to accelerate exponentially. You're simply trading your time for their expertise.
All right, moving right along to Pillar 2, scaling digital passive income.
Once you really understand the power of trading time for skills, you can start identifying market gaps and scaling a side hustle into a massive digital asset. And you can do this with almost zero upfront capital. Let's walk through a real-world case study. Meet Rohit.
Back in 2022, Rohit was a junior graphic designer in Kolkata, India, making about 25,000 rupees a month. He was totally caught in that daily 9 to 5 grind, but knowing he needed to break out, he took a calculated risk. He drained his 20,000 rupee savings to buy a cheap secondhand DSLR camera. For a whole month, he uploaded photos to Shutterstock with absolutely zero sales. Then, a breakthrough happened. He sold a single photo for 20 rupees, which is only about 25 US cents. But he didn't quit. Instead, he analyzed the market. He realized there was a massive global demand for authentic Indian culture imagery, but a surprisingly low supply. So he exploited that exact niche. And today, his minimum daily income from those digital assets hits 20,000 rupees. He successfully scaled his passive income to the point where he now makes his entire old monthly salary in a single day. That is the power of scaling.
Now let's tackle Pillar 3, monetizing physical assets.
When you look at everyday items, do you see a tool or a depreciating liability? Let's imagine two brothers, Sohan and Rohan, who both inherit a car. They literally have the exact same starting opportunity. Now, Sohan has a typical consumer mindset. He keeps the car for personal use, paying for gas, insurance, and maintenance straight out of his own pocket. For him, the car is a depreciating liability. It's actively draining his wealth. Now look at Rohan. Rohan has an investor mindset. He turns the car into a taxi, driving for Uber. Suddenly, the car becomes a cash-flowing asset, generating income that easily pays for its own maintenance. Over 3 years, Rohan saves the profits, buys a second car, and rents it out, creating a completely passive income stream. It's the exact same initial asset, but a completely different financial destiny. The best part is, you can apply Rohan's investor mindset to your own life today. Here are some rapid-fire practical ways to monetize what you already have sitting around. Have an unused floor or an extra room in your house? Rent it out. What about that smartphone in your pocket? Listen, it's a full-blown production studio. Leverage it to create new digital income streams. Do you own a DSLR camera or maybe a guitar? Don't just let it gather dust in a closet. Rent it out to local clubs or institutes for a monthly fee. You don't always need new capital to start building your garden. You just need to fundamentally rethink the purpose of the assets you already own. Which brings us to the most important piece of the puzzle, the ultimate asset, time. We've covered real estate, digital markets, and physical assets, but absolutely none of it works without this one fundamental truth from our source material. Someone who has nothing still has time. Time is your seed capital. When your bank account is at zero, your time is the currency you use to buy skills, build networks, and plant the seeds of your digital and physical assets. Time, when it's invested wisely rather than just aimlessly spent, is exponentially more valuable than initial cash. Every single wealth-building strategy we've talked about today requires you to seriously audit how you are spending the hours in your day. Which leaves us with this final critical question. How are you spending your time today to build your money garden for tomorrow? Are you still exhausted, running around trying to catch butterflies, or are you ready to sit down, learn the skills, and start planting the seeds so the wealth actually comes to you? The tools are right there in your hands. It's time to get to work. Thank you so much for joining me on this explainer, and I'll see you next time.